says chat. Everybody's on mute right now. So at the bottom of your screen, you'll see a chat, and you can type in any message that you want to right into the chat area, and Paul and Shawn will be able to see those and answer your questions as we go along. I'd like to welcome Kathy Webb from NATA for being here, and we did a co-meeting the other day, and we had 100 people on it, and that was pretty exciting. And I'm Jeff Lovell with ASA Northwest. I'm the executive director. And Kathy, would you like to introduce yourself?
Sure, I'd be glad to. Thank you, Jeff. I'm Kathy Webb. I'm the executive director of Northwest Automotive Trades Association, NATA. And first off, I just want to thank Jeff and Brenda for inviting NATA and our membership to this very important meeting about the payroll relief program. And thank Brenda for all her hard work, turning it into a YouTube and everything she's done for this. So we appreciate that, and our membership appreciates that. And just update everybody on our website, www.aboutnata.org. There's a COVID-19 tab with updated information, forms, anything you need to know. We also have online classes for techs and management that are all free. And so I encourage you to go there and look at that for help. We're always here. We're working remotely, but we're always here to help you. So feel free to call us at any time, and we'll do what we can. So thank you very much, Jeff.
Yeah, thanks, Kathy, for being on. Thanks for your support, too. It's been great. So I'm going to give a little regional report for ASA Northwest. I'd like to thank Shawn and Paul for their presentation today. You guys really swung it out of the park on Tuesday. I really appreciate that. And the House is voting on the fourth stimulus package on the COVID-19 relief package this Friday. And we're hoping that that's coming out. And there's a lot of new things in there. I sent Shawn and Paul quite a bit of information the other day, but I'm sure they already had it. And was just sending them information as I was receiving it from our lobbyist in Washington, D.C. So we're fortunate to have Bob Redding there, and he's our boots on the ground in Washington, D.C. and doing a lot of things for us there. And then also I wanted to mention on our ASA Northwest, asanorthwest.com website, we also have a COVID-19 area where you can go to and get information on. We post new stuff up there every day. So there's always something new happening with the COVID-19 legislation or training that's going on. So make sure and go to our website, check that out. And then I'd also like to thank all of our members that helped us out last week with the iTech program. I haven't even talked to Brian about this yet, but we just found out we got another grant today. And so we're very excited about that. So yeah, and I'm glad that that's happening for our apprenticeship program. On our schedule coming up, we had our retreat set up for June 25th through the 28th at the Heathman Lodge in Vancouver, and that's been canceled. And unfortunately, we did have to cancel that. July 31st through August 2nd, we have ATE happening at the Doubletree SeaTac Airport. You can go visit atetrainingexpo.com and look at our website, and you'll be able to see all the classes going on there. We're praying that things turn around by the end of July. So we're still having that program going on. So we're excited about that. And then they have opened up the golf courses. So August 12th, we have our ASA golf tournament happening at Eagles Pride in DuPont. And then we have ATE October 23rd and 24th happening over ATE East in Spokane. And we haven't put that training together yet because we're still working on ATE over here for July 31st through August 2nd. So at this time, I'd like to have Brian say a few words about the Cash for Clunkers that we've been working on in Washington, D.C.
Hey, thanks, Jeff. You know, usually I commend you and say all these good things, but since you forgot to tell me about the big grant, I guess I can't do that today, especially after we just got off a conference. How could you do that to me?
I just found out like 45 minutes ago.
All right, well then you're off the hook. So yeah, so for those of us in the automotive world, I think cash for clunkers should ring a bell. And when we talk about 2008, 2009, and we start looking at what happened to the cars that went into this program and what it did to the industry, I don't think it's tough for us all to agree it didn't do us good. And in most of the studies that you look at for this, they pretty much all say the same thing, that they really believe the people who went and bought new cars with that would have bought them anyway. And currently, Ford Motor Company, to my knowledge, nobody else has joined in on this yet, and it's just Ford Motor Company out there, but they're pushing hard to see it happen again. And aside from the fact that there's supply chain issues, there's production issues, there's a litany of problems that already exist to even make the program work if they put it in place. It's just bad for our industry. And if you haven't had the time or you haven't joined onto it yet, ASA has a very easy form to go fill out and let your legislators know how you feel about this. It's on the website. I know we've got it posted there. And I know Brenda last time was able to post a link for us in the chat. Brenda, would you be able to do that again for us? So if you haven't done it already, I strongly encourage you, I urge you to get on there, sign it, and get your name on it. It has been reported that what we've done already is making a difference. So if we can get another 50, 75 names on this thing, it's definitely going to give it more weight. So if you haven't done it yet, look in the chat window. Brenda's going to put a link up there. If you have an issue with that link, pop into the ASA website. I know it's easy to find in there. So again, cash for clunkers, it's not good for us. So with that,
Brian?
Yeah.
It's Kathy at NATA. I just wanted to let you know that we did blast email that to all our members today.
Good. Well, so, we appreciate it, and
and just wanted to let you know that. So
we thank you guys, because that's how you get things done, is by working
exactly
together. So
exactly. And thank you for keeping us on top of that too. So
well, that's what we all have to do, right?
Right.
So thank you guys. And so with that, I guess we turn this over back to Jeff.
Yeah.
Are you going to do an introduction here?
Absolutely. At this time, I'd like to have Pamela read the disclaimer, and then do the introduction of Shawn and Paul, and we'll get everything rolling.
Okay. Ladies and gentlemen, before we begin today's meeting, we are required to remind you that due to antitrust laws, we are not allowed to discuss any subject relating to prices charged, labor rates, or similar subjects. In addition, the programs or speakers presented are not necessarily endorsed by ASA, nor do they express the association's views. Thank you. All right, Shawn Mattingly. Born and raised in Olympia, Washington, Shawn's first job out of high school was in banking as a teller. While working full-time as a teller, she started her college education to fulfill her lifetime dream of becoming an accountant. She continued to work and attend college even when living in Italy for 3 years. She was distracted for a few years while starting a family, and then finally in 1998, she graduated from Central Washington University. She started her career at Weinand and Associates, CPAs, just in time for the 1998 tax season, and became a shareholder of the company in January 2005. Shawn's main focus is in accounting and taxation and on building lasting relationships with business owners and individuals. Occasionally, Shawn is a guest speaker for organizations such as Accounting and Finance, Women's Alliance, Washington Association of Accountants, and the Pierce County Bar Association. In addition, she is very active in the Lakewood Chamber of Commerce and has served as a board member and an ambassador. When she's not in the office working, you may find Shawn performing at local fairs and events as a belly dancer. She is part of a professional belly dancer troupe. Did I get that right? Who says accountants are boring? That's awesome, Shawn. Thank you. And Paul Long. Paul Long is a 19-year veteran of business banking, not just commercial banking, but working with small businesses under 10 million in annual sales. He is passionate about working with business owners and helping them understand the ever-changing banking industry, whether it is understanding what loan product your business should use or what tool would make your banking easier. Small business loans can be complicated if you don't have someone helping you through the process. Loans like SBA loans, loans for startups, acquisitions, or lines of credit can be confusing and can get you in trouble if they're not used correctly. He has a business finance and economics degree from Eastern Washington University, as well as graduated from numerous specialized programs. Paul worked for a successful small community bank as vice president of business banking and SBA lending. Thanks, Paul, for being here.
You bet.
Oh, rock star.
All right.
Thank you.
Well, I gotta say one thing here quick. If you guys watch my screen, I learned to not wear a green polo against a green backdrop. So if you notice,
You're headless.
sorry. Anyway.
Great headless. Or
Yeah, I know, clearly.
Thanks for having us again today. If you were on the call on Tuesday, I guess, you'll hear some of the same stuff, but hopefully we have different folks. And I think we're going to try to keep it to 30 minutes of us kind of talking and back and forth, and then 30 minutes of questions. What we'll do, and Paul did such a great job, we'll read the chat questions and we'll try to answer them. I answered one, but it's almost impossible for us to talk and answer written questions. I can't do that. I'm very bad at it. So it's better to answer them because more than one person might have that question. I did pull off the questions from earlier's meeting that Brenda printed for me or got for us, which was really cool. That helped, and we expect similar questions today. Paul, do you want to break away with quickly some updates that happened from SBA just this week on some questions that we've been wondering about?
So the biggest thing that you're probably hearing on the news and everything is boy, now it just went off my head, but where you could possibly give the funds back, the safe haven. And really that's meant for people who have other sources of capital and really have either had improving sales through this COVID-19 and maybe don't need the PPP money and they take the money anyways. So that's what you're hearing about. To be honest, here at Timberland, we've done about 900, and we've had one that has chosen to give it back. So larger banks, of course, have larger customers, and therefore that number may be higher. But so if you hear that on the news about people panicking about giving it back, the question you need to ask yourself is my business doing better or worse under COVID-19? And if it's doing better under COVID-19, then you probably should think twice. What Shawn and I are going to go over today is the forgiveness part, but we want to be very clear that the official guidance from SBA has not come out yet. That means we are expecting that either today or tomorrow. If you go to treasury.gov and there's a button at the very top called PPP, if you're one of those people that want to be the first to know, that's where you should go, because that's where we get our information too. And they were again hoping to have that information today or tomorrow. In my opinion, the longer they wait, the better the terms would be, because we obviously see that the economy and everything is kind of still struggling. We're talking about 8 weeks worth of payroll. Well, maybe they're going to move that to a larger time period, which I have a feeling they will, my personal opinion. So that's kind of the update for this week and kind of what's been going on with PPP. Shawn?
Thanks. Yes, and then both of us, him and I, have the same big disclaimer. Brenda uploaded, there's a PDF attachment, it's sort of a rough outline that we used last Tuesday. But again, this stuff is changing. Guidance is still looking for guidance on some things, and anything that's in this outline could be changed. So just know that that's our disclaimer. Some things we just don't know, and we're going to answer, we don't know, we need guidance on that. So we're not the rule makers, we're just trying to share. One of the other updates that came out from SBA, besides the requirement to did you really need the PPP funds, SBA came out and said, if your loan was under $2 million, you don't have to worry about certifying that you had that need. So if any of you got a loan for more than $2 million, good on you. Most small businesses haven't got that much. We've seen some close to 1 million in my client base, but not that many. Then the other clarity from SBA was, hey, if you laid off employees and then you offer to rehire them and they refuse, because now you have the PPP money, you have to put that in writing, they have to refuse, we document that, and that could risk their getting their unemployment continued, because they have to make statements to the state at unemployment that they weren't offered to be rehired. So that came out, and that if they refuse to come back, and you have that documented, that will not affect your forgiveness calculations when we look at the full-time equivalent employee piece. So if everyone has the outline, we just try to go through this stuff and kind of going back and forth on things to remember.
Hey, Brenda, did you upload that?
She did. Yes, she did. And thank you, Brenda. Right at the beginning, or well before 2 o'clock. So if you got on just a minute, if you go to the chat, there's a link there. I believe with
Can you upload it again for other people who, because for example, I joined it too and I don't see it.
Oh, good call. Yeah, I'm sure Brenda will do that.
All
right.
It's up at the very top of the chat. You'll have to take your scroll bar and go to the very top.
Right.
Perfect.
It's still
Thank
not
you.
there.
So
Please do it again.
So the goal, once you've got your PPP money, and most of the people on this call are probably an essential business and you're operating, maybe at much reduced normal levels, but you're operating and we have money to pay our employees and pay some of these costs. And so some of the big questions is, when does my covered period start? When does it start? What does that mean? I saw a quick chat question. I haven't got my money yet. When's my 8 weeks start? It starts when you get your funding, even though that will now go past June 30th. Don't get June 30th date was the program is open and you can apply up through June 30th, and you have to rehire employees by June 30th. Many people are going to get their money this week and even into next week and even farther, and their 8 weeks is going to end in July sometime. So that date of June 30th is important, but don't confuse what it is. Your 8 weeks, you don't have to finish everything by June 30th. Your 8 weeks doesn't have to end shortly, I guess. And so the bigger questions are, what are the costs that are eligible for forgiveness, and what are the costs that, payroll and non-payroll costs? And so the outline I have, but we all know the biggest thing, 75% of your loan proceeds up to, or even more, at least 75% has to be spent on payroll, wages, commissions, compensation, whatever you want to call it. In addition
Not bonuses.
And not
bonuses.
Not bonuses, yeah. Commissions sound like a good thing.
Right.
We don't have a lot of clarity on bonuses directly, unless you heard something recently. Have you, Paul?
No, it's still very gray. I'm just telling my clients no, and if you get it, then congratulations.
Yeah, we're just, the word, people are like, well, I'll just pay people a bonus. And yes, there's hazard pay and people are in people's homes, and if you're in the service industry or touching people's cars and things like that, and maybe you want to give your employees that bonus because, hey, they've actually been working during this thing. We don't know. I would say if you're going to do that, we don't know, but be very, don't be reasonable. Okay, don't be a pig. Like, oh, everyone needs a $20,000 bonus. Well, if they've never ever received one like that, that's maybe not a good idea.
One thing you mentioned on Tuesday's call, Shawn, that was brilliant. Just one thing, it was brilliant. That was if you have a policy about bonuses, that's going to really help you. So either create one, have one, that would be very helpful.
Yes. And in general, bonuses should be written anyway. And they if they only apply to non-management people and worker bees or whatever, the good policy is supposed to be in writing anyway when it comes to wages and compensation and bonus structure, whether that's based on production or gross margins, bottom line, or whatever. You can tag bonuses to all kinds of things, but having it in writing helps. So if you get that in place now, if you want to have a hazard bonus or a production in the, production under extenuating circumstances bonus or something like that. So payroll costs are included, wages, that kind of stuff. What's also included is employer benefits like health insurance, dental, vision. Someone asked last week, Brian asked about health reimbursement arrangements, which is Section 105. Yes, when those employer reimbursements are made, yes. Flexible spending account, which is a Section 125 type deal, where the employee defers some from their wage and the employer reimburses for out-of-pocket medical, those are allowed. What's not included in those medical benefits is an employer's contribution to a health savings account for that employee. You might have a health savings account attached to your health insurance. If the employer contributes anything to the HSA, that's not allowed in this calculation for forgiveness. That came out from IRS last week. Also not allowed is medical savings accounts, which is kind of an older thing. Probably nobody has one, but some people might. That's not allowed, nor are there newer 2019 plans that were called QSERA plans. Those are not allowed for group benefits in this PPP process. So if you have a straightforward group benefits, dental vision, it's the employer's portion. If your employees pay 30% and the business pays 60%, it's the business's 60% of those premiums that you're gonna use for your forgiveness calculation. It also includes retirement plan contributions, employer portion. Early on in the chat, someone asked about IRA contributions. Now let's be clear. Business plans or 401k plans, assume we're all nonprofit, we're not nonprofits, maybe unless you're a 403B or 457. 401k, simple IRA, SEPs, or KEO plans, hardly anybody does that, Roth IRA type deal. Traditional individual IRAs can't be done, I don't believe, in this plan, but simple IRAs program, which is a business plan, and 401k plans, the employer's contribution, okay? And when we talk about wages, I want to just dial back there, we're talking gross wages before all these crazy deductions the employees have, okay? So if my wage is $1,000 a week, and then I'm going to have some deductions from that for insurance and things, the amount for forgiveness is that gross wage before those employee deductions. So what's also included is state payroll taxes like unemployment for the state of Washington. Some states have a different platform for labor and industries. In our state, we have a weird labor and industries plan. There's a lot of dispute about that piece. I was actually on another part of a webinar the other day listening. There's some folks in Washington state that think L&I, your premiums aren't gonna qualify for the forgiveness piece. We don't really have guidance. In some states it would, because they have a different platform. Play it safe and just only consider maybe the unemployment insurance, the employer portion there. Things that aren't allowed. If you have contract workers, they're not your employees, 1099 people that come in and like you have a hired outside bookkeeper or janitorial service, they're not allowed. The employer's share of Social Security, Medicare taxes. You know, the employee has some deducted and the employer matches those. That employer matching tax, not allowed for submission for forgiveness. So those have to be paid with some other funds. And then so that's the payroll costs that are allowed. Then there's some payroll costs that aren't allowed. And one piece of that is compensation over $100,000. If someone in the year is going to make $100,000 or more, you have to restrict the amount you submit for forgiveness. Now, for a whole 8-week period, that's about $15,383 on $100,000. But if you're paying weekly or bi-weekly, you'll have to do the math and figure out if you have 24 pay periods, $100,000, you're allowed, you know, $3,500 a pay period. Then there's a cap, and you have to kick those amounts over $100,000 out on an annualized basis. No one's really come up with a fabulous calculator for that yet. I mean, people have made them. There are worksheets, Excel worksheets. I think I sent it to Brenda last week, and she can share that too. It's just a simple Excel tracker for tracking this stuff. I recommend that you build something in Excel or borrow something from somebody else, or I put one up there for Brenda to share with everybody. How am I doing, Paul? I need a drink of water.
You're okay. You're doing good. Absolutely.
Okay.
While you're getting that drink of water, so just to reiterate, generally speaking, things that are not considered are Social Security and for federal taxes. That's generally what is not allowed to be used for. I just want to make sure I'm driving that home to many people.
Yes, we're hoping that in the submission process that nobody knows what the platform is going to look like, but there'll be like compartments or ways for us to put that information in there so that bankers can get it and send it on up the chain for forgiveness. Nobody knows yet what that'll look like. There's not an official platform or process yet.
Yep.
So that's what we're waiting on guidance on that eventually and other things.
So what's going to be needed, I want to get into the part of what's really going to be needed at forgiveness. So your bank is going to be reaching out to you somehow to let you know of what they're going to need on that. So the SBA and the government's not going to come and ask for this information, your bank is. And they're going to be the one that's going to be transmitting that information. So make sure that you have copies of all of your payroll records. Make sure you have any sort of receipts or anything that you paid, because remember 75% can be used for payroll up to 100, or 25% can be used for rent or utilities or interest payments. And I want to make sure I really hit those home, because you are looking at, if you're looking at making a rent payment and you are paying a third-party rent, that is qualified. If you have a lease agreement in place with yourself because you own the building and the business rents from you, as long as you have that rental agreement, that is okay. So a thing that, again, Shawn mentioned on Tuesday as well is make sure you have a current and most up-to-date rent agreement between yourself and the business. Because it's critical that that was done before February 15th, which is a rule in there. When it comes to interest payments, you can make interest payments on loans, but not any principal payments. So if you have a credit card and your monthly payment is $500 and 300 of that is interest, 300 is qualified, 200 is not. If you have any sort of loan payment, the same rule applies. It's all about interest, not principal. So that's another thing that can kind of get you. Utilities. Say that again, Shawn.
And make sure the debt is in the business name.
Thank you.
Very important legal name of the entity that got the PPP funds. It should be debt related to that entity and not personal stuff.
So even if you have a personal credit card that you use for business or auto loans, for example, oh, my business pays for my personal truck, that does not qualify. It must be under the business name, because I have a feeling we're going to ask for statements, and it is going to need to be on there.
I would guess that they're going to ask on the documentation side, and this is good to focus on. I want to dial back. You need to be prepared to produce payroll summer reports, evidence that you paid your payroll taxes, evidence that you paid the health insurance premiums, the vision, the dental, the 401k contribution employer portions, or simple IRA plan portions, whatever your retirement plan is. That you need to have information about that and document, whether it's bank statement showing that the money was paid, a payroll summary reports, a receipt for rent paid. So let's talk about those non-payroll costs of 25%, up to 25% of the loan proceeds can be paid for these things. Now, rent, pretty straightforward, you think, and then you start getting down into the weeds. You better have that lease already in place. Yep. Someone asked a question early on in the chat, well, can I pay back rent? Because I didn't pay March or whatever. Can I pay that a little? You know, I read things that says, yeah, go ahead and pay your rent in advance. And if you haven't paid your March rent because you didn't have any money, but we don't really have any hard and fast guideline. What we do know is your lease had to be in place on February 15th. And so.
And chances are too, the thing is again, you have that 6 weeks from disbursement, or I'm sorry, 8 weeks from disbursement. So if you have any prior debt prior to that, again, that's gray. And I would almost say, no, you should not do that really, in order to be safe.
Yeah, it's really hard to say at this time with the rent. But let's talk about utilities real quick. And your basic utilities, water, sewer, electric, all that kind of stuff qualifies. Cell phones, landlines, Comcast. Not your subscriptions for your manuals and stuff. That doesn't, someone asked that. What is also included, and I see WA on here from Moose Radiator, is if you're doing delivery and you have lots of vehicles, you have gas, transportation costs, fuel. Fuel is included in your utilities. It sounds weird because I don't think of that as a utility, but transportation costs include fuel. What it does not include is if you were going to reimburse an employee for mileage under the federal mileage reimbursement rates. That isn't allowed, not mileage reimbursements, but actual fuel costs. So if you have a fleet of 5 vehicles, you're delivering parts or whatever it is that you do, and those are part of your business vehicles, that fuel is going to count along with the water, sewer, electric, gas, all that kind of stuff, internet and phones. So we had some more clarity on that a couple weeks ago, and I forgot to mention that on Tuesday. I'm very sorry. So fuels could be very instrumental for some folks, because some people don't have a lot of rent. They might have more fuel and things like that. That was one of the things that I forgot to mention. I'm very sorry about that. So like Paul said, you can use 75% for payroll or even up to 100%. Some people are choosing to use it all. But if you've got payroll that's capped and things like that, that might not be the best way to strategize for maximum forgiveness. A couple of the things that also count for forgiveness, in addition to hitting your payroll costs at 25 and 75 and make sure you're using them in the right percentages, is we have to also look at the full-time equivalent employee head count. When you apply for your loan, you said, I have 18 employees, full and part-time total. They just wanted the total number. In the forgiveness calculation, there's going to be, hey, what's your full-time equivalent employee head count? Well, they haven't defined what that means. Full-time equivalent employee, what does that mean? Different rules define FTE for like healthcare purposes versus other things. So we don't really know, but let's assume it's 1 and 1, but we don't know. So if your head count drops a little bit, that could turn your dial down on forgiveness. The other piece that could harm you is that you will have to look at each individual employee's pay during this 8-week period and compare it to earlier this year before all this stuff happened, or even last year during a certain period of time, and see if they got paid the same or not less than 25% of their the period comparison gross. So their wages can't be reduced more than 25% for this period. That will also turn your switch down on the forgiveness. It'll dim your amount that you can forgive if that happens to you. And sometimes we can't control the employee head count. And sometimes we can. So you can add more. No one said, and you can add more employees. Some people have actually hired. Maybe it's time to hire a real bookkeeper, or you're an IT person or a social media manager person. You haven't done that and you're struggling with your other head count. Well, now it's time to hire that person. As long as you're curing the full-time equivalent employee count by June 30th and getting them on payroll, then that's good. But those things will affect that unless we have more guidance on how it won't affect it. So besides the costs themselves, the 75% for payroll and related costs, non-payroll costs, 25% that are allowed. And then we have these other dimmer switches potentially on how much we actually paid each individual employee and the full-time equivalent count.
Hey,
so,
Shawn,
yeah.
let's spend about 3 more minutes and let's talk about SBA Advance EIDL loans.
Yes.
And then let's dive into questions.
Go, Paul. Tell us about EIDL loans.
Okay, so many people have received EIDL loans directly from SBA, or even you've had these $1,000 or up to $10,000 that's been deposited in your account, as well as you had a PPP account. So technically, because it just appeared in your account without really much knowledge that it was going to be there, that is going to be deducted from your forgiveness of your PPP. So keep that in mind. If you did get the EIDL grant of, say, $6,000 because you had 6 employees, that will be deducted from your forgiveness. So keep that in mind because you cannot double dip. If you did get an EIDL loan, so say you got $500,000 in an EIDL loan, the critical piece of this is you cannot double dip. But what you can use is your PPP for payroll, and you can use your EIDL loan for anything else outside of that. But you can't use it for rent or utilities if you used it for that. So keep that in mind, that you must keep payroll using PPP, and everything else could be the EIDL if you're one of the lucky ones to get one. Any comments you want to make on that one, Shawn?
Well, no. Yes, a couple things. You can actually send the SBA advance money back. I've had people say, well, I don't want it. What do I do with it? Because that $10,000, let's say you got up to $10,000 or maybe you got 5, that money is taxable to you. It's a grant. and it's taxable to you. And some people don't want it. So you can send it back. We don't know how that works. The other thing is that the PPP loan, if it's 100% forgivable, if you win that prize and all is forgiven, it's not taxable to the business. So the grant would be taxable. A regular idle loan proceeds are never taxable because that one's not forgiven. That one you have to really pay back. And then the PPP loan, the forgiveness piece, is not taxable to the business. Anything that's not forgiven on the PPP loan is turned into a 1% 2-year term loan with 6 months deferral. Generally speaking, with no collateral personal guarantees. Correct, Paul?
Correct.
However, if any of this thing was done and you acquired this loan in any fraudulent way, I read this today, then there could be personal guarantees on there, so don't be fraudulent. And at the end of the day, a 1% working capital loan is pretty darn cheap. Even the terms on the idle loan are pretty reasonable when you look, if you've ever borrowed any other loans for different things through your business or SBA loans or whatever. And the other side of that, while the forgiveness is not taxable, IRS came out last week and said, by the way, those expenses that you're paying with the PPP money are not going to be tax deductible. Now, logically, in my brain, that makes complete sense. And hopefully it does to you too. Right now, this is the IRS's stand on that. The forgiveness is not taxable to your bottom line, but neither are those expenses. So hopefully most of you are using an Excel worksheet or something to track your actual expenses, because when we get down to the end of the year, those things aren't going to be deductible. But neither is the forgiveness going to be taxable. From an accounting perspective or financial statement presentation, if I was looking at a profit and loss, I would make sure that we were able to move those dollar amounts eventually when we know you're forgiven and everything down to an other expense, another income account on your profit and loss. So that's out of your thinking for calculations. That's just me being a CPA going, I'd like to know what the real operations are, because if we had a weird year, how do we look for real? Because it'll be hard to compare things when you have these costs in there that didn't count because we had this other cash flow. I'm just thinking ahead to when you're analyzing your comparatives year over year on that. And I think we've hit our time. What else, Paul, before we go into Q&A?
Nope, I think that was very good on there. So let's really get into questions, and that'll of course bring stuff up. So can PPP funds be used to pay employees and employer IRA contributions? I believe you talked about that, but.
It's employer, you gotta have an employer plan. A simple individual IRA plan is not an employer plan. So again, it has to be an employer plan and only the employer portion.
Haven't gotten the loan yet. Do I have 8 weeks to fund if it's past June 30th? Here's the thing about June 30th. You are supposed to be back to whatever employee count you had as of February 15th on June 30th. Your 8 week starts when you get the loan funds. So that will go past June 30th. In several articles I've read, the transportation comes up as a part of forgivable issues. We discussed that gas, fuel does do that. We're confused about the $100,000 gap on employee payroll. Does this mean that payroll is exempt from forgiveness, or does it mean that we can pay them from PPP funds and include it as a part of the forgiveness up to the point where they reach 100,000? We discussed that a little bit as well. Again, anything over on that just needs to be deducted from there, but up to is a part of the forgiveness. Loans under 2 million will not face any sort of formal audit unless you are Brian Kelly. Brian will be audited. I will make sure of that. What happens to when an employee had an emergency and had to leave at the end of the month and will not be back until August? Shawn, you want to take that one?
Wow. I guess that is going to affect your FTE. I would say if you've got time before June 30th, hire a temporary replacement to get your FTE headcount the same. Or if it's only going to reduce, if you had 10 employees and now you're at 9, you're at 90%. So if you're able to hire another head. Now remember, it's heads, not positions. Does that make sense? It's the number of people, not exactly what those people are doing that matters on your head count. Rehiring isn't always the same exact people because people leave or they have an emergency. So, you know, will there be dispensation if something like that happened? You know, we don't know. The only guidance SBA has said is if you offer or to rehire that employee and they refuse and it's documented, it won't go against your FTE head count. That won't hurt your dimmer switch. But if somebody leaves, I would say you'd have to look for a temporary person to fill in and put them on payroll. Now, people have asked about, well, can I pay family members to do stuff and things like that? If you're hiring people and they have legitimate work to do and there's an employment agreement, and that was passes some sniff check, sure. But if you're hiring your college student that lives across the state and they're absolutely doing nothing, then that would be a problem, I think.
If we're not back to FTE at 630, is the amount forgiven might be discounted only due to the payroll being down due to the lack of rehires, or is there a penalty for not being back up? There's not a penalty. It's the dimmer switch approach. So it'll just be a little bit less.
Right, less would be forgiven. So you end up with a loan, which the terms are pretty reasonable.
Yep.
So yes, so that's why we really monitor your FTE account and do your best. There will be situations where people will have that dimmer switch and they've done the best that they can do. They're still going to get a dimmer switch effect. It's not a perfect process.
Right after we received our loan, we had 2 employees injured, non-employee related, and will not be returning for 3 to 4 weeks. Will that be a penalty, and how will that affect forgiveness?
I actually had this question from a client because they had an injury and they were on L&I for a week, but they brought him back and put him on the payroll. They couldn't work and they didn't work, but they had the funds to pay them. And then they were wondering, will this help my L&I rates in the future? I mean, these are really, that's a specific business decision, but they even worked with L&I, and their L&I claims agent said, you know, it won't affect your rates really bad if you leave them on unemployment. Then the business owner is worried about the dial down on the forgiveness because their head count's down. And so they did a little bit of, we had them on payroll doing all the light duty we could do. And then, you know, we ran out of stuff. So then he went on L&I, but then he'll be back. So we have a little time. So while that sounds like a all over the place answer, might be more specific for your business. What are you more concerned about? Not getting full forgiveness or having higher L&I rates? Is there a way to bring them back on light duty? There's lots of programs with L&I to have employees work on light duty and to manage a claim. So that's kind of convoluted. I don't know if I did a very good job on that one.
Person mentioned they sat through a PPP webinar yesterday with another bank, which I've heard was very interesting out there. And they said that bonuses were normal if bonuses were before normal before COVID, then go ahead and continue, but don't call it hazard pay. That's a fair analysis, I would say. But again, we don't have guidance on that. So again, all of us lenders and banks and CPAs drink from the same water fountain. So
yeah, one of my I learned so much from clients. They called like, well, you know, we normally pay on production, but right now we're paying flat rate. I'm like, well, you guys doing good? Yeah. Well, then pay them a production bonus. And it wasn't a hazard pay bonus just because they're actually performing very well. And so, but if it's in writing and things, yeah, we are just so confused about that because everyone's trying to cure. One of the other things that people are doing is if they're changing their pay cycles because in our heads, we think, well, I have 8 weeks, so I pay every month. I have to change my pay cycle, or I have to go from bi-weekly to weekly to match it exactly, but you don't have to do. People are. When you change a pay cycle like that, it can harm someone if they're getting hourly rate because the cutoffs, right? So what the solution has been, well, then just either estimate what hours they would have worked or call it a pay cycle bonus, pay cycle change bonus, because we're trying to not harm the employee. We don't normally do this, but the circumstances are making us change our payroll periods, or we feel we need to. We get a lot of questions on payroll period cutoff times on that. I'm sure there's one in this here so far. We'll keep going. Thank you, Paul. Keep going. You're doing a great job.
Toll fees. What's your comment on that one?
I guess that's related to transportation costs. I haven't heard that. I mean,
No.
fuel's pretty no-brainer. I mean, track your numbers, but again, you can toss out that number, maybe pay for it with other money, pay for your fuel with PPP money. Just watch your percentages. You know, we're not gonna, I don't know if we're gonna get that specific guidance. Tolls, yes. Gas, yes. Tolls, no. Repairs and maintenance, I don't know. How would that's a transportation cost, but I think it really means fuel.
Yeah. Do utilities need to be in the company's name? I'm going to say yes.
Yes.
Yep.
Yes.
Garbage pickup. It's a utility. I would think so.
Yeah, if it's in the business name, yes.
Yep. New vehicles. No. How about vehicle insurance? No on vehicle insurance.
I would say no, because really we only hear about fuel and the transportation costs.
Okay. How do you split out payroll for April when funded after the first payday?
And that is the most popular question I get
No idea.
on that. And so if you look at it really literally, you're looking at the covered period, which is 8 weeks, and the period starts the minute you get the funding. So checks written on that day you got funding or the day after count. So that would include, I think, your payroll. So if your payroll was the 15th and you got your PP money on the 16th, I don't think the 15th payroll will count. However, this is the part where we're waiting on guidance from SBA, because we're saying, hey, SBA, payroll, you know, some people accrue wages, have a cutoff date, they pay 10 days later. How are we supposed to manage this? We haven't had a lot of guidance, which is what has led people to changing their pay cycles to capture that, what was missed maybe in that first payroll that didn't make it there at the end of the 8-week period. So I would say if you just be strict, if you got it the money on the 15th, but your payroll was on the 14th, that's too late. But if you got paid on the 15th with your PPP money, your payroll was on the 16th of the month, and you're golden on that first payroll. So that's a tough one. And everyone's situation is different because no business has the same pay cycle as another, but you know, it's just very difficult, very difficult.
So the next question is, someone mentioned about how about EIDL funds to continue to make payments on an SBA loan or line of credit. If you have an SBA loan or an SBA line of credit, your payments are being made by the government for the next 6 months. So that should have there's no correlation to that whatsoever. For employees whose hours were reduced due to COVID-19, can lost wages be reimbursed through the PPP? Shawn?
Boy.
That's a great one.
Yeah, we get a lot of that too. And it's just like, well, we're trying to make my employee whole, and assuming they weren't on unemployment. I mean, in the spirit of it, it's supposed to keep employees on payroll and off of unemployment and back on payroll, even if our operations aren't fully up and running, we don't have revenue coming in, we have less revenue. The spirit of this is to keep employees on payroll. So they don't really tell us that. So how do you, how would you do that? I don't know. We don't have guidance on that, but I know why people want to do it. Emotionally, they want to help out their employee. If there was a gap in what they got paid, if they were, if they were on unemployment, they were getting paid, and unemployment will catch them up. So if they come back, that's a tough one. We just don't have a lot of guidance on some of this stuff.
One person that I actually did the loan for made a comment, and I'm just going to kind of describe it because I think it's important for everyone. So when banks got these applications from you, we determined the loan dollar amount based on the information you gave us. So if you did make over $100,000 or had an employee that made over 100, the bank should have reduced the loan amount to affect that if you didn't already in your calculation. It is completely possible that you're like, hey, I got a loan for $200,000. It's possible that the bank did not calculate the loan amount correctly and maybe gave you too much, and you will be on the hook for that. So be aware that again, we have to follow rules as a bank, but also for what you applied for as well. So just keep in mind that not everything can be forgiven based on some of these calculations, okay? Can we fund an ESOP with PPP? I'm gonna go with no.
Say no.
Yeah. Sign-on bonuses. I'm gonna also say no.
Is if in the normal course of your business and you're hiring and you have a signing bonus and that's a normal course of your business, I don't know, but yes, we don't have guidance, but if that's normal and you've been doing it for years, maybe. That's interesting. Maybe giving their bonus after you've got forgiveness.
Exactly.
For signing. Keep it clean, kids.
Last question. If your business can sustain expenses and you have spent the amount of money for your loan, do you have to pay any of the money back? If you use the funds correctly, 75% payroll or more, rent, utilities, interest payments, and you did everything correctly, then the chance of you getting that fully forgiven is high.
And your FTEs and
your
how much you're
FTE
paying
stays
each
the same or
employee.
more.
You hit all the numbers right, it
Yep.
should be forgiven with the information that we have now.
And that is all we got.
Does anybody have any more questions? If you do, go ahead and type them in, and we'll give you like 1 minute. But I just want to thank everybody on behalf of ASA for being on the call, and let you know that Shawn and Paul, thank you. And from everybody, yay. And just thank everybody for being on the call, and remember that we can't do what we do without you. So we really appreciate your support, and look forward to having more calls like this over the next couple of months. Who knows how long we'll be working from home and in the situation. Hopefully at some point things will let up and we can all get back together again. Paul, there was a couple more questions that came on.
Yeah, real quick. So I will not be to June 30th by the end of the 56 days. How do I figure FTE? I've read that a couple times and I'm trying to fully understand that question.
Maybe they're asking, I'm not going to be fully back up to full-time equivalent employee by June. You got to go with the head count you have before by June 30th. So the goal would be if you're able to hire a different type of position or something else that you hadn't had to hire before. I saw a question about if I hire, can I fire them the next day? Boy, I probably wouldn't play around with those games.
No, don't do that.
Because remember, June 30th is a date you have to rehire people by. But if your PPP 8-week covered period goes after June 30th, how's that going to work? Now remember, not everybody got their money the first part of April. Some people are still getting their money. So depending on when you got your money, that's when your 8 weeks are. So don't confuse. June 30th is the head count hit, but you're still got weeks after that, depending on when you got your money. So everyone's situation is slightly different.
And last question, can you shorten the last pay period to write your payroll in the 8-week period?
I'm saying yes.
Okay.
People are doing that because they want to eke out every penny. And that's why we're waiting on this accrual versus cash. When payroll cycles cut off, that's natural and normal. Clearly, accountants did not write the CARES Act and these rules.
Wish you did.
If they did, it'd be a lot smoother.
No kidding.
Okay.
All right.
Thanks again, and we'll be talking soon.
Thank you all.
Thanks,
everybody.